Welcome back to Info Daily. Back here, me and Anthony, starting out with our stocks video here. This will be a consistent series where we do like a what is blank, and we'll just continue to give you all more information about these different stocks and Social Security and 401ks and different things like that. But we appreciate you coming back here and watch our second video. We're super happy to get into it, and we're going to start out with what the stock market is. Basically, the idea of the stock market is just a consistent buying and selling and trading of stocks. You'll have the three main terms that you'll use for stocks. You'll have buy, sell, and hold. Holding being holding onto the stock and not doing anything with it after you buy it. And then the other two are pretty self-explanatory.
The reason that the stock market is so popular in the United States is that anyone can buy through it. You can have fractional share trading on Fidelity, Robinhood, Yahoo Finance, all those other trading platforms, and that you can do it all by yourself. Or if you want to have a professional help you with the hundreds of thousands of dollars that you may have, you can get a financial advisor to help you with that. And almost anyone can do it, in contrast to real estate and the other forms of investments.
Now we'll get into like the more specifics of like what a stock is and how it works. So basically a stock in itself is just a small piece of a business or a corporation, and you're just buying the shares, or you're just buying the shares of the stock, and then there can be any volume of stocks in a whole corporation, 3 million stocks or 100,000 stocks or however many, and then you can purchase so many stocks to be a majority holder in the business. You could purchase 51% of the stocks, for example, and then you're the majority owner, and you'll have more say in what the business does in meetings and in different things like that. We'll have the two types of stocks. We'll have common stock and preferred stock. Preferred stock is more like the VIP backstage pass of a common in comparison to a common stock. Preferred stocks are normally reserved for the CEOs or like the original business starters. And then the common stock is more of the stuff you'll see on the Fidelities and the Yahoo Finances and the Robinhoods. And that's the stuff that we, like me and Anthony, for example, will trade with and will buy and sell with in those more common electronic trading systems.
I remember whenever I started trading on the stock market, or even learning about the stock market, I was curious about exactly how big that little slice of the company is. And it's almost like in science where you have an atom, or you have a human body, right? And then you have the trillions and trillions of atoms that make up the human body. So if you buy enough in huge chunks, you'll be able to have more influence in the company with voting rights.
And also getting back into like that difference again with the preferred and common stocks, the preferred stocks will also be the ones that get the revenue first. And we'll get into dividends in a second, but the idea with those is that the revenue that's gotten from the company in a given quarter or given year will be given to the CEOs or the preferred stockholders first, and then given the remainder of the revenue will be given to the common stockholders. So there's potentially a scenario in an accounting period, for example, that you can not end up with any dividends or revenues on your end of your stock. So it's a trade and buy and sell in that sense, because it'll be reserved for a lot of it will be reserved for the preferred stockholders.
Another aspect of owning a stock is that some stocks have dividends, which is your share of the business's cash flow. So you know how you have 1/1,000,000th of the business or 1/1000,000th of the business? You get a tiny share of that cash flow in a dividend sometimes. Companies like GE, AT&T,
Wells Fargo, Bank of America. A lot of the banking stocks will hold more of those higher dividends normally, just because that's how the banking system works with it. They'll have higher dividends on their stocks compared to other stocks.
Yes, and Coca-Cola, I remember hearing about Warren Buffett making a lot of money off Coca-Cola. And the thing is with stocks, the bigger amount of risk that you have in it, for example, if you had 1,000,000 shares in contrast to one share, the difference that the stock goes up in a day, if the stock went up $1 in a day per share, if you had 1,000,000 shares, you would make $1 million in that day. So the higher risk, the higher reward, the more dividends you get sometimes. A question commonly asked also is if a stock is like a product from the business. For example, like a phone from AT&T. And the thing is, it's not. You're actually buying a share of the business itself, profits, and in the ownership. So basically, you are taking a small risk by taking part in the business yourself.
What am I actually buying from? Am I buying a part of the business from the business itself? And normally that's not actually the case. You're not normally buying from like the actual corporation or from Elon Musk himself, for example. You're normally buying from another shareholder who wants to sell at that moment in time and you want to buy in that moment in time. So you're buying from the other shareholder and you're just trading shares amongst one another. That's what the entire definition of the stock market consists of, is just that buying and selling of stocks amongst other stockholders. You're not normally buying from the corporation itself. You're buying from other people who own a share and want to sell.
Companies go public on the stock market after being private because being private only allows you a certain amount of capital, which is the money that you raise in order to fund your business. In terms of, imagine the Lumix company, they make cameras. They can make a lot more cameras with $200 million than maybe $1 million that they could self-fund. So that's a way for people to chip into the business while also the company can raise money and expand. So it's a brilliant expansion technique, and it's really a big deal when a company gets on the S&P 500 index and various indices of the world.
And then getting to the stock market as a whole, a lot of the times you'll see the common one here in the United States is the New York Stock Exchange. That'll be basically where that business resides, and where its like ground corporation is normally where it will sell in terms of where the stocks will sell on which market. So you'll have like the Switzerland stocks or the United States stocks in New York City. It just depends on where the location of the business is, and that'll be where those stocks reside. The 52-week highs and the 52-week lows, those will be the market values at its highest and lowest in a whole year, because there's 52 weeks in a year. Don't ask me why the stock market does it by weeks. I'm assuming that it's just easier to work with quarters that way in terms of the 52 weeks, I'm assuming. But that'll be on most stocks. I know Robinhood carries it. I know Yahoo Finance carries it. I'm sure Fidelity probably does too. That'll be the top end of where has this stock been at its best and where has this stock been at its worst.
As well as the 52-week highs and lows. To keep in mind also revenue growth, and also news plays a big part in these companies, because big companies like Tesla, whenever they release a new car, whenever Amazon rolls out a new aspect of their shipping mechanisms, it's a big deal. It affects the economy of the United States. It affects your daily life, and it can affect your economic life even more once you're invested in the stock market. So as time goes on, we'll help you to understand more about the implications and what to look out for growth opportunities, because these can help you in your financial life and your future tremendously.
And then to close us off, we'll have more of these stock-specific videos, but it'll always be, we're going to try to stick to that title base of what is blank, and then kind of get into the different aspects that we've talked about in our intro video. And if y'all haven't seen that, go ahead and click on that and get the idea of what Info Daily is and what we're kind of trying to get out of this channel for the people watching. But basically, getting into the second video will be some subtopics that we'll talk about will be PE ratios, beta ratios. These are also topics you may not know of, which is why we're here. We're going to give you that information about those. PE ratios, beta ratios. We'll also talk about splits in stocks, how that works. Basically, like the market value of the stock gets so high that it splits off into multiple regroupings of stocks, where the stock gets so low that it groups together and becomes, you own 4 shares and the shares are so small that they just group into one. And then the last thing that we'll mention is there's programs like Google Sheets and Excel that will allow you to import stock prices, and then you can kind of see those live as well, and you can have like a spreadsheet of your stocks. That's something that I do, and I think that's just super helpful for me to just see like the exact market prices of each stock and compare them to what I spent on them when I originally bought them.
As we're learning more about the stock market and just how to be financially responsible, we hope that you continue to absorb the information just as we are. In the past year, we have just started, so we are continuing to get better and to improve every day. We want to make the information more understandable for you, because whenever you look at stock markets online, you just see all these numbers and graphs and green and red, and how Donald Trump talked and it shot the market way down or up. So we want to help you understand that and why. So we look forward to helping you.
We really appreciate the 5 likes that we got on the last video, and we hope we can continue that. If you want to see more Info Daily videos just like this one with different content or the same content, if you want us to come out with our next stocks video, just let us know down in the comments, and give us that subscribe and hit that notification bell for our fresh new content. We are posting weekly at the moment. We should be picking that up to get a little bit more consistent and hopefully give y'all more content more often. And that's, at the end of the day, we're just trying to give y'all unbiased news and information as soon as it comes to us, and just get it out to all of our viewers out there.
Thank you guys so much. We look forward to continuing this journey. From Garrett and Anthony, we're Info Daily. See y'all next time.